Right now, yes, the stock market is shaky, but the bigger story, the thing that nobody is talking about, is the US dollar. Specifically, that people are starting to walk away from it. And that is not just a vibe shift, okay? That is a global red flag. So let's talk about what's happening in plain English. The US dollar, she's normally the Beyonce of currencies. Strong, reliable, everybody wants a piece, but lately, she's losing fans. The US dollar has dropped almost 10% against other major currencies this year. Why? Because investors are watching the US government make messy and chaotic moves, and they're like, I'm out. And now what we're seeing is not only people pulling money out of the dollar, but also US government bonds, aka the government's IOUs, which brings me to the next piece, bond yields. Don't let me lose you here. I'm going to explain it to you really simple. Think of it like this. When the government wants to borrow money, they sell bonds. Usually people are lining up around the corner because it's a safe bet, right? The US government always repays its debt. But now with everything that's going on, they're like, if you want my money, you got to pay me more. I want more money to take on what I perceive is higher risk. So because of this, bond yields, aka the interest rates, those are going up. And if you're an investor, you might be like, well, isn't that a good thing? Now I can make more of my money. But this is actually a problem because it's a sign of fear. It's saying that people don't trust the government the way that they used to. It's not like before when people were coming and lining up and saying, I'm all in. Now they are saying, convince me. So what are people doing? A lot of them are running to gold because when they have fear and uncertainty, they want something that feels real. This is not a recommendation to go out and buy a bunch of gold though, because we don't chase short-term trends here. We follow the long-term patterns. So what does this mean for you? This isn't just rich people playing Monopoly. When the dollar weakens, your money buys less. When bond yields spike, it costs more to borrow. And when confidence drops, that's when recessions creep in. What you need to understand though is that the rich, they're not panicking because they have a plan. And if you're like, okay, hey, I'm panicking a little bit, I'd like a plan too, I've got you. I have put together a free How to Get Rich in a Recession masterclass that's going to teach you how to safeguard your wealth and how to spot opportunities to take them so you can come out of this recession better than how you went in. Because recessions don't last forever, but the wealth you build in them can. I went from $40,000 in debt to millionaire at 30, and now I'm teaching you guys everything I know. Link in bio.